Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Last week we had a string of, we'll call it bullish news across the board. TLDR was dollar got weaker. We'll call this a win for liquidity. M2 flipping positive on a year-over-year basis. Liquidity overall hasn't changed too much. That's global liquidity. ETF flows on Friday flipped from negative to positive. The week as a whole was still a disaster. So there was a little silver lining there. And Hamas-Israel stuff has calmed down a little bit. Potentially, maybe. Ceasefire in the works. So as far as the strength of the headwinds, we'll say it like that. We'll say the strength of the headwinds got weaker. They didn't disappear. You know, rates aren't going any lower super soon, but because of the unemployment news, the market really liked the increasing likelihood that we're cutting sooner rather than later. Indices like that. Gold, I'll talk about on the chart, maybe less relevant to us in general, but I think gold has a nice falling wedge on the chart that'll probably break up this week or next. DXY got weaker. We'll take a look at that. Liquidity, you know, yes, M2 is up, but liquidity is still not great. It's maybe improving, but not great. We have a 10 and 30 year auction this week in the US. We'll see what that does, if anything, for the yield conversation. But overall, uncertainty probably a little bit better after some numbers and an exciting last week. As far as the crypto stuff, we're a few days out now from having, we'll take a look at the cycle chart. The later part of this, the later we get in the later part, the highly more bullish likelihood we become, right? as we escape the supply effect, supply reduction, disinflationary pressures, eventually that starts to catch up with us, usually between day 70 and 100 past halving, and then we have a sweet old party between 70 and 100 days past halving and 400 to 500 days past halving. That's usually what the cycle has looked like. Flows, like I said, are they bullish? They're not exactly bullish, but we could have a bullish week of flows. Options no closer. The warehouse ETF stuff is getting closer. Again, this goes back to, you know, TBD just means later. So the later we are into mid-May, into the end of May, the higher the likelihood we get more flows because we have more money tapped into these products. And again, it's just sort of this flywheel effect. So that certainly helped us. I wouldn't say any of these headwinds, none of them went away. They're all still there. They just weren't as bad as people thought, right? Powell came out and said the next move's going to be a cut. He didn't say, we even talked about hikes. You know, he was sort of avoiding answering that directly. But so that's what the market wanted to hear. Now that could change. Again, anything this week could change as the market is still super data dependent on what's going on. It's just we don't have a lot of anything this week as far as economic data. 2 weeks from now is the next CPI. That's going to be the next big thing to watch. But we survived last week, so that's good. As far as flows are concerned, again, flows, you know, everybody was happy on Friday, including me, but flows continue to be negative week over week, declining. And that's, to me, what you'd expect. I expect flows to come out when prices are going down, flows to come in when prices are going up, not necessarily leading, not necessarily lagging, but having an amplification effect on both sides. Because almost nobody owns this stuff, I expect higher amplification on the upside, aka more bullish multiple eventually. And we've had 11, 12 billion in. How much more do we expect for the rest of the year? I'd say at least another 10 billion for the rest of the year. And that should certainly be bullish for price. Another silver lining for flows last week was the lowest outflow for GBTC, largely because of Friday there was an inflow, an unexpected $63 million inflow. And the funny thing about that is, you know, it wasn't neutralizing any outflows. So the outflows could have been decently large and the net inflow was bigger than the outflow, right? Why they had an inflow could be a mistake. Somebody just bought the wrong thing. Could be related to the mini Bitcoin trust. It could be arbitrage of some kind from a discount. I don't know. I don't think anybody really knows what's going on there, but we'll take it, right? We'll take anything we can get to neutralize the GBTC outflows. as far as the cycle plan, okay, what I was looking for last week, I went and rewatched the video. I was saying like, look, we look pretty bearish. We had a bearish DK cross. I said 56K last week or this week. We hit 56K. We look pretty good, right? So I don't know realistically if these lower targets are possible. Some of these are variable. They'll move week to week. But if this recovery fails, if this potential inverted head and shoulders on the chart or whatever else fails, then certainly I would expect low 50s, almost guaranteed. And the way this is lining up, we're probably lining up for something into the next CPI, which is on the 15th, I believe. And that CPI is probably going to be flat month over month. And so that's probably not going to be super helpful. But then again, if it's plus or minus 0.1%, the market's going to go berserk again, right? So we're back to this just like wait and see game, wait and see on the Bitcoin side. Largely though, most of this stuff, I'll talk about a lot of this in the video, is not bullish yet, right? That could change throughout this week pretty easily, but we're not quite there. Here's a quick look at global liquidity. Again, it's flat, right? You could say there's an ascending triangle here. There's TA reasons why this should keep going. There's fundamental reasons why this will keep going, but we're not quite seeing that yet, right? I don't want to count our liquidity chickens before they hatch. One other thing related to flows from Glassnode, minor net position change. So minor outflows were pretty significant on a daily basis throughout most of April. Towards the end of April, that bearish pressure slowed down quite a bit. And just another little thing, right? We don't need mega inflows every day. We don't need miners holding onto every coin every day. We just need not the opposite of that, right? We just need everybody just not selling at once at every single high. You know, if we could just have a couple days of that, we'll probably be okay this week. So it's a good sign to see maybe the minor selling pressure is done for now. We'll see. You know, maybe we get back to all-time highs and it gets turned on again. But to see this decline, I would argue is a pretty good sign overall. As far as where the drawdown took us relative to other bull markets, this is from Check On Chain. I kind of forget this website existed, but they have great data. It's free. I'll put a link to this stuff in the description of the video. But in any event, we're looking at the bull market drawdowns. Most of the time, we've seen significant bull market drawdowns to the tune of 30%, 40%. Thus far, we've only seen a 20% drawdown-ish, right? Could this get worse? Of course. Is it in the vicinity? Is it in the ballpark of where we'd expect a drawdown to go? Yes. Would you expect deeper drawdowns this cycle than 20%? I would think so, right? This all just goes back to a game of probability, because inevitably there are going to be people who are left on the sidelines again for whatever reason, and they're going to be wondering, when is enough, right? I'll talk about the 20-week, I'll talk about the cloud, talk about all that stuff. But this is another way to check. You know, if we're down 20% from all-time highs, it's within the wheelhouse. 40% is amazing. We only had that a couple times as far as a buying opportunity, but anything 25 and greater is likely a great opportunity. One other thing I noticed with these drawdowns is we're kind of mirroring the 2016 to 2018 cycle, which is where we want to live. We want to live in this very slow grind into a crescendo, maybe blow off top, right? So we want relatively frequent drawdowns that maybe aren't super turbo uber deep, okay? Not like 40% plus drawdowns that will just kill everything. But 20 to 30, as we did in 2016, you know, that is reasonable, right? So if you're swing trading this from level to level, okay. You know, the holders are going to yell at you saying, you shouldn't be trading this. And the swing traders are going to be saying, I'm making more money swing trading this on leverage than hodling, whatever. But just something to continue to monitor as we go along here. Relative to the halving, this is 400 days, 600 days, 500 days, right? Whatever it is outside of halving, we're not quite there yet. You can't even see 2024 on this chart because it's smack dab in line with the previous two post-halving moves. And again, this does not excite me. From here to 100 days, not super exciting. From 100 to 400 days, very exciting. even 100 to 300 days. So we got time. We got time on top of time. From week to week, we're going to be talking about the same thing for a little while, I think. This was 2012. Now, 2012 took off with a bang pretty quickly. 40 days in, 42 days in for the Hitchhiker's Guide fans. So it's always possible that we were quicker on this, but I will lean towards not. I will lean towards probably 30 to 100 days before we do anything. That'd be my guess. Anything substantial, right? We can, of course, revisit all-time highs here. We can revisit the top of the range. That's all good and dandy. This is the 20-week moving average. And I said this before, but anything close to this in a bull market, if you're waiting on purchases or DCA or whatever, non-investment advice, but this is the gold standard. You can see in 2021, in 2020, we didn't quite ever get to the 20-week moving average. So you can't use the exact level as a singular bid, okay? But if you fuzz it, and you can watch this on the 140-day moving average on a daily, but if you fuzz it a little bit, plus or minus whatever, it'll get you in, right? We certainly had that happen this past week. And you can probably consider this weekly candle a dragonfly candle. We had a similar candle after the ETFs launched. This week confirms last week's dragonfly. So we want to see, ideally, a weekly close above last week's wick, top wick. Okay, we will take that as a massive win. A weekly close inside of last week, less bullish, but not horrible. And then obviously any lower lows here, and it's not great on the week. So it's going to be hard to not interpret this as bullish next week, so long as we don't have a complete and utter meltdown. Just looking at, again, 2016, 2017, talk about this a lot because, again, it's a great roadmap. Here was having in 2016 in May, and we lived around the 20-week pretty frequently. We snaked in and above it for the most part. So that is always the tried and true North Star in the bull trend. As far as months and potentially a year, like 400 days after having, where do I think we're going to be? The power law corridor has been pretty good at looking at where we might be a year from having. So a year from having would put us April 19th, 2025. Gives you a range there, 112 to 417. I like that range. That sounds like a good range. It sounds like a bullish range. I'll take it. Anything close to 378, 375, 350, it's going to be tough for a lot of people not to let some go past even 100K, 200K, past 300. Okay, if I'm watching this future self in a year from now and I haven't sold anything past 300, that's where euphoria kicks in and you get some unrealistic delusions of grandeur. Okay, so we'll see, because 300 is a wild level, but that's within the realm of possibilities. Someone else posted this log regression chart a few days ago, and I also like this as a roadmap. It's not quite 300K, but it does give you some sense of upside in this move, which is, we'll call it a 2x-ish left in this move. So it'll probably be something between a 2x and 300K plus. We'll see, right? If things get crazy on the liquidity side, if things get crazy on the institutional inflow side, 250 plus, completely possible, which is why you don't want to mess this up. If you can't trade, if you're a bad trader, just don't do it, okay? Like, everybody wants to learn, but if you're continuously losing money in a crazy bull market, then that's going to be a problem for you long term. Before I go any further here on the Bitcoin, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. Looking at Kraken Pro today, looking at the volume, it's good to see Bitcoin at the top. It's good to see Bitcoin several multiples above stablecoins and above altcoins. It's good to see strong volume on a Sunday. But even some alts are doing quite well. I'll talk about PEPE in a second. I like how this chart looks a lot up here. unfortunately, right? It's a meme coin, so it is what it is, but PEPE looks good. You've got some AI coins doing quite well. Near is bullish as I'm going to sound on Solana this cycle, not necessarily today, but this cycle. I think, Near might be a dark horse based on how it's acted and how strong it looks against even Solana, ETH, and BTC. Doge had some positive news. Tesla's taking Doge now, guys. Everybody get bullish. Huge news, huge news. This still looks like a massive head and shoulders to me. But if everything else is pulling up, Doge should do well. Also interesting, just the group of stuff at the top here. It's kind of memes, Sol, ETH, and AI, right? Everything else is kind of just whatever past that. And that may be the story of this cycle. This cycle will have probably very specific winners. It will probably have extreme laggards. And so if you're sitting in something that's just not it, you're going to get punished for that long term. So you definitely have to be careful with that one. As far as Bitcoin, this cycle's Mystic Dan, right? This is the fastest horse, probably, arguably, for some period of time, right? Looking at the daily cloud, we almost tapped at the very bottom of the cloud, didn't quite get to the 140 moving average. As far as reversals go, this is pretty strong. This is a strong argument that meat may be back on the menu over the next week to 2 weeks. Certainly looks less bearish than it did initially. Now, the daily TK cross, still bearish. It's not like we've magically healed this fresh wound that we've created on the bullish momentum. It was great to see the ETF outflows. It was great to see the tourists. We can wave to them. Goodbye, tourists. So this could make a great and full recovery. It's just, I think, to me, too early to call that. There's some things to watch for this week. I'll talk about that. But yes, this is leaning decently bullish. It's just not, the cloud is not satisfied with this on the daily. 200-day down here, also a target, right? If this recovery fails, we are definitely headed to low 50s for sure. I don't think 33, 35 is on the table at all. And we did not get a bull div just yet either. We don't have to satisfy those things, but that would help, certainly. Looking at the 12-hour, we can start to see the case for an inverted head and shoulders a little more clearly. We can start to see the case for a potential bullish breakout like we had in February a little more clearly, a little clearer, right? This stuff can fail. That's certainly possible. So it's not like, oh, I think it's this, so let's go 100x long right now. No, for me, I'm waiting to see, do we get a right shoulder? Do we break out of the 12-hour, right? These are things to watch for this week. But so far, so good. I think that's undeniable. This is the 8-hour cloud. Again, with that inverted head and shoulders possibility, it will probably be tough if this breaks out for us to get to new all-time highs immediately just because we've made all of this overhead resistance. Now, I do know there are a lot of real fun legacy guys who hate crypto who will be very disappointed if this goes against their shorts, and I will love to see it. So I'm rooting for that. But again, we're not above the 8-hour yet on the cloud either. This is just something more to watch throughout the week. But this looks good so far. Looking at the weekly cloud, the Kijun popped up quite a bit. That's a good sign. We're not as overbought as we were, but this may take another couple weeks for us to actually get moving again. This idea of a giant cup and handle or a giant inverted head and shoulders has been brought up by a few people now. Also not impossible. The real question is, how deep is the handle going to get? How deep would a right shoulder get? Are we satisfied with the pullback? Possibly. But you can see how deep we got over here. This was like a 40% drawdown, right? Didn't quite get to 40 here. So in the back burner, in the deep caverns of my subconscious, yes, that pattern exists, but I'm not going to just assume it's going to work out because it's a possibility. We also likely satisfied a pretty messy case for the triple top head and shoulders breakdown. Again, any lower lows, I'd expect us to go to 50. I mean, that's going to be a magnet probably for shorts to close as well around that level. So we'll see. We look good. We look okay, but it's, I think, too early to tell at this moment. Looking at a pitchfork, we held the midline, which is another good sign. I would say it probably limits our immediate upside. because we are more likely than not to stay within the confines of this trend channel than magically just zoom to 100K. So this is still pretty wishy-washy as far as expectations. I know everybody wants to get all bulled up. They want to hear me get all bulled up. The reality is it's a better trade lower, but that doesn't mean it'll happen. Again, this could easily recover on that inverted head and shoulders possibility. You've also got the 1050 on the daily moving average to watch, and we're not there yet, right? But again, like February, possible, totally possible. All the people saying, I told you so, they're going to be doing their victory laps. I get it. But to jump out last week Sunday was to protect you from downside beyond even what we saw, right? That's the point. So we could see a 1050 cross this week. I think it'll probably take us into next week. I think we'll be talking about this next Sunday, but also something else to watch for. One other thing for Bitcoin to watch that I think has had a pretty great signal is BitX on the 4-hour cloud. This is the legacy cloud. BitX is the 2x Bitcoin ETF. It's had really great breakout signals that have led to a 2x from cloud signal to cloud signal. You have arguably a pretty decently sized falling wedge situation here. And again, we're not even above this on the 4-hour. So yes, I am bullish if this then that, right? If we start breaking above all these clouds, if we start breaking above the neckline, if we make a right shoulder and we're at the neckline, yeah, I'm very bullish, as you'll see on near in a second. Here, I'm half bullish, right? We've got the left shoulder, we've got the head. We're not quite there yet. So I think we got a little time. But this is definitely something to watch. If we magically gap to like 44 plus, then sure, yeah. And this flips bullish again, bullish TK cross. This will happen quickly. It's on the 4-hour, but it is legacy. So legacy is going to be closed for a lot of, crypto's trading hours. This does measure again to another 2x from 44 to 88. And that's a great trade on leverage, right? Basically using the 2x ETF. As far as alts are concerned, to me, these look much more actionable this week. I mentioned these last week, but these still look more actionable this week to me than Bitcoin does. We've got BNB, which probably needs maybe a little more time, probably less actionable than Near or PEPE. PEPE probably looks the best amongst these. BONK probably needs a little more time, but these charts look very good to me as a potential breakout signal. Now, if Bitcoin breaks down, these will suffer. So all you do is just hope for not that, right? You just hope that Bitcoin does not break down this week if you're long this stuff, because the rest should take care of itself. These look very good. There's even probably an inverted head and shoulders in here. We could see another shoulder on all this stuff, right? Perfectly possible. It still looks very good from a recovery perspective. Solana, I guess we'll start with the daily cloud on Solana. Still wishy-washy. Much of the Bitcoin analysis is the same here. Potential inverted head and shoulders to watch for. Waiting on bullish recovery above the cloud. The signals have been great on the daily. Entry, exit, re-entry, exit somewhere ideally up here using Williams fractals, which I don't have on the chart, but needs more time. Definitely needs more time. Even the 8-hour sort of is like paint by numbers a little bit, because it tells you, okay, cloud is red to green, we're above the cloud, go time. Cloud is red to green, we're above the cloud, go time. We had a pattern there. We had two patterns there. We have a pattern here potentially. If the cloud flips red to green, we're above the cloud. It's right there for you. We're not there yet. This would be above 160, but it looks okay. It looks very good. It's setting up for that potential throughout the week. It's just too early to call it at this moment today. Much like Bitcoin and the giant inverted head and shoulders, cup and handle possibility, you could argue that for Solana, as many people already have. I don't have the gold chart with the massive cup and handle for the video, but yeah, like sure, anything's possible. I'm not going to say it's impossible. What I really like about these giant patterns on Solana, on the way down, it had, I would argue, an inverted cup and handle that moved to the target. It had a giant head and shoulders that moved to the target. So why not? Why not a massive cup and handle to some ridiculous target? We'll see how far it gets. I have no clue, but definitely leans bullish for the cycle. ETH daily cloud also showing signs of a potential eventual completed inverted head and shoulders here. also has a bit of a falling wedge in its own right, descending volume profile as well. So it just needs more time, but it looks okay. And people ask me all the time, why don't I just buy now, right? I think it's this. I'm usually right. What if I'm not, right? I could be wrong. This could all sink to new lows on some headline Monday morning, right? I have no idea. This is just a matter of waiting for the probabilities that make sense based on risk reward. So for me, I would certainly prefer if this was above the daily cloud. Long-term ETH targets, here's a pitchfork. As long as it stays in this pitchfork, there is a possibility that we see some crazy targets on ETH eventually. My guess is later on in the post-halving move, the ETF stuff on or off for the US may disrupt this significantly, but certainly possible. You could argue cup and handle with this. As long as we hold into this multi-year pitchfork, as long as we don't close below that white line, this stuff is possible. Do I think it's probable? No, but it's certainly possible. I think we're going to need to see a lot more activity and excitement on ETH for this to actually play out, but certainly a possibility. Let's be honest. If Bitcoin goes to 150, 200, 250, 300, you're going to see Solana to 500 plus. You're going to see ETH to 10K. We're going to see all this stuff just lifting off. Here's the log regression for ETH. Ultra long term. Again, it's still, it's living in the buy zone, I would argue, still. I don't think it is the fastest horse right now, but eventually there may be a time when the trade makes more sense. Overall, the log regression still looks okay. It's just the difficult part for people is when this fails, if it fails, what do you do? If this breaks below 17 or whatever the low is, I don't think realistically enough people would be able to cut their losses at that point. And you could say, well, COVID, we hit that level. And in 2016, post DAO split, reorg, blah, 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 whatever, we hit that level. Yeah, that could be the low, but you need the limit somewhere, right? I'll use AVAX as a proxy for a lot of alts right now. There's a lot of W double bottom stuff. This could, again, morph into some sort of triple bottom, inverted head and shoulders. I don't think returning to what is essentially the middle of the range is going to be the biggest part of the move. So I don't think you'll be punished for waiting if you just wait for cloud stuff flipping bullish. If you get a range expansion on something like AVAX or anything that looks like AVAX, those targets are significant. So I don't think waiting until we're above 45 here is crazy, right? Why play this chop nonsense when you can just wait for a better signal and a better chance to move higher? There's a ton of garbage alts, I like to call them, that still bouncing around in the bottom of the weekly cloud. Cycle-wise, these might do okay. These should probably maybe have a move eventually, but I wouldn't be portfolio denominated in sand. Okay, that just isn't where I would want to live right now. I think there's a time and a place for that, and it's probably going to be later on in the cycle, not necessarily right now. Quickly here on the legacy side, here's the gold falling wedge. Again, this looks great to me from a chart pattern perspective. This looks ready to go this week. So we will probably see this move up. And the question is, how does crypto respond? How does risk respond? Do yields pushing higher or lower push gold lower or higher, right? All things to consider and think about this week. DXY had a very angry week last week, thanks to what I would call Goldilocks headline type stuff that meant rates not going higher in the near term. So as long as DXY can maintain in this range and not push higher, crypto should do very well. On the S&P side, we are trying to recover above the cloud. There's still a head and shoulders risk here if we break down. There's still a bearish edge-to-edge risk if we break down, and we may get a bullish TK cross this week on the daily, so that would be very good for crypto. It just wouldn't necessarily make a lot of sense. I think it's going to take more time than a couple weeks to recover here. It took quite a few months in Q3 to recover. Now you could argue election year, seasonality, etc., but definitely a wait and see on that one. And as a quick aside for the head and shoulders invalidation criteria, this is always something you want to look for. This is QQQ on the 1 hour definitely had a head and shoulders at the bottom, which is perfectly possible. And not only did it close above 430, which was the right shoulder, it closed above 432, the head. So this low time frame head and shoulders is most certainly invalidated at this point, which is good for crypto as well. We don't want to see legacy breaking down. You've also got NVIDIA making pattern after pattern, inverted Adam and Eve double top, potential inverted head and shoulders, back above the cloud. This negative TK crisscross this week on the daily, still holding above the cloud. It's all over the place. Maybe this is why AI coins are doing so well, with an expectation of NVIDIA continuing on here. It certainly looks more bullish this week than last week. And then lastly, there's plenty of other stuff outside of crypto to trade, as I keep saying. The Chinese internet ETF looks great from a cloud perspective, ready to break out. MSOS had some good regulatory news on the cannabis ETF last week. Morgan Stanley has a pretty clear-cut head and shoulders, and then I think PayPal has a clear-cut falling wedge, potential inverted head and shoulders at the bottom there. So there's a soup du jour of chart patterns and cloud stuff that isn't necessarily Bitcoin this week. There's other stuff to do, just as an option. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.